Good morning. It's Tuesday, February 7th, 2023, and it's 11 o'clock a.m. Pacific Standard Time. So this update is kind of late because we had a market report that came out this morning about 10:40 a.m. Pacific Standard Time. So I wanted to wait till after the report came out because it was by the Fed, and they always make the market move up and down. And that's what happened. The market on this 4-hour bar here just shot straight up after his speech, and then it came straight down. It actually hit my trigger. I had an alert right here. So I put another alert in. And the reason why I have this alert, because if I'm out somewhere and it hits this alert and it keeps going down, then if there's a second bar, which is too late for that anyway, then I would purchase more put options. But at this time, it's too late. I wouldn't, even if it came down here and stayed here, I still wouldn't buy it because I'd have to wait for that second bar. And the second bar is confirmation to me. So the market's gyrating. It's looking for a direction right now. And here's the ES, which is based on the S&P. This is the Dow Jones here. And right here is the NASDAQ. So they all seem like they're doing pretty much the same thing. So here's the daily chart. So I'm sticking to my plan, and nothing's really changed. So we're right here. Just going to have to wait and see what happens. So the plan is, for me at least, to trade this thing down. I have put options in place. And as far as when I'm getting out, I'm not sure, because I'm going to have to see what the energy is to this market, how it is coming down. If it's a strong force coming down, then I'll stay in. But if it's kind of mediocre and it comes down, hits us 38%, I might get out. I'll just have to see. And if it's a strong force and comes down, hits a 50, and of course the 68 is kind of stretching it, and it's going to start retracing a bit before it starts coming down again. At least that's what I'm thinking right this minute. So that's my plan for now. Of course, things can change day by day, but for now I'm sticking to my put options. Like I mentioned before, if this market were to come above this line up in this area, then I'm going to have to get out with a loss, meaning that this mini bull market here is going to continue. Now, I don't see that happening, but anything's possible. But just by reviewing the consistency of the charts, it just seems like it's overbought quite a bit. It's ready to come down, and at some point it's going to come down a lot. I'd mentioned before, it can come all the way down to this line. So if it does, then we're pretty far from there. And so some of these experts, at least the ones I listen to, are saying that this is going to be equivalent to 1929 crash, and actually even more extreme. And if that's the truth, then that crash took about 2.5 years for it to finally hit bottom. 2008 crash took about 1.5 years. 2000 crash, about the same thing, plus or minus a couple months. So that means we've been down for about a year, so we got another maybe year and a half to hit bottom. So for this to come from here to here, it needs to happen pretty fast. Otherwise, we're going to have some pretty big downturns, and that's not healthy. When you get these like this, or something like what happened in right here for the pandemic, those aren't healthy moves. You know, it can wipe out a lot of people. You don't want to have that here. You want to kind of go down in increments. But, you know, if it took a year to get to this point, it takes another year to get down to here, it's still not enough. So eventually we're probably going to have some of these moves here, which are good for you and me, because we can start, you know, piling on the put options. And put options gain a lot of value when they start heading down that fast. I mean, incredible amount of value. There's going to be people making millions, hundreds of millions, billions of dollars when this goes down. Now, those people, very few, maybe 2-3% are that already know how these markets work. They're the ones that are going to be making that kind of money. But the average person, of course, is not. It's going to happen. The opposite will happen. So that's the whole purpose of this channel, so I can help you, hopefully prevent you from losing money and making money instead of losing it. All right, so here we are again. Like I said, there's not a lot to do. I only spend a few minutes a day just looking at these charts, and at this point, nothing I can do. I can set my alert up in this area, another one. Just to be on the safe side, and then I can just leave. And you know, it's already about 11:15, so it's getting pretty late. I don't think a lot's going to happen between now and closing time, so we got we got 2 hours, so actually something can happen. I doubt if it's going to go up. If anything, it'll come down, but we'll see. I don't like to make predictions. I just like to have a plan in set, and then I go with that plan. And if the market doesn't go with the plan, then I'll have to change and make a new plan. Although if this starts coming up in this area, I doubt very much I'm going to be buying call options, because I think then it's, like I call this, a danger zone. It's going to be too extreme. But anything's possible. So for now, this is it. Still got my put options, and we're just now going to have to wait till tomorrow and the rest of the week, see what happens. Okay, so that's it for now. Talk to you guys later. I want to mention one more thing. I don't normally trade stocks. I like to stick to the ES here, the SPYs, but I'm going to show you a chart here. So I was looking at Tesla here, and actually I purchased some put options right here. So Tesla went from here to here in a really short time. I mean, just in 1 month, it went up $100, and that's pretty crazy. You know, anything like that, that's kind of an extreme, what I would call, just like this is an extreme. And sure enough, guess what happens? It just comes right down. And that's what's going to happen here. So not only did it come to the top, but it hit this nice resistance point. You know, you got a couple hits right here, a couple hits here, and a little bit, it's kind of close right here. But anyway, this is pretty good resistance. Hit up here, so that would be considered a double top. Now, of course, it went beyond that. It's going to really stretch that out pretty far. It's already stretched out. I mean, it hasn't retraced at all. And if you do Fibonacci on this one, you know, you can safely say this market's probably going to come down about halfway, or at least fill this gap and down into this point. So a lot of money can be made shorting this market. And right now, the put options are pretty expensive. They're actually more expensive than the SPYs, than the ES that I trade. So that's telling me that there's a lot of people who are going to make a lot of money on this thing coming down. So that's another option. You know, you can find trades like this. There's a bunch of them. And short. So I did short this. I got some put options here going down because I think this is just too sweet to pass up. And like I said, there's so many opportunities. You got Amazon's another big one, and Amazon just went from here all the way up to here, just shot up parabolic like a rocket, and look what happened. It's already coming down. So of course, if we are in this bear market continues, then this thing can go down pretty far. Amazon, oh, here's a good one. So market came down here. Let's see how much it retraced. Right there. Actually retraced 50%. So I just made a video on these. No, actually I didn't make a video. I just made a video on retracements, which I do include the Fibonacci. And maybe I'll just make a video just on Fibonacci. But anyway, I use this as a tool. And so markets come down, they retrace. But anyway, this came and hit the 50%, which the markets usually go from this line, the 38.2 to the 61. And anywhere in here, it retraces, pretty healthy market, and then it starts heading the other way. And that's what this did. It came up and almost hit that line exactly. Look at that. And now it's coming down. So I expect Amazon definitely to go below this and come all the way down, at least by June, and maybe somewhere down in here. So again, so many opportunities here to make money, make lots of money actually. Here's another one, Meta. It's been in the news a lot actually, all year, last year. So and it went from where, $88. So it went up $100 also since November. That's a pretty good move right there, so that's going to start retracing too. It's going to fill this gap in and come all the way down. I think it's going to happen pretty fast, maybe this month it's going to come down. So here's another trade right here. The way I would trade this is, let's see here. First, like I talked about balance areas, I got a video on that. So you got a balance area right there. So there's your balance area right in here. And then if I go into the 4-hour chart, right there, there's a balance area. The way I would trade this is I would short this. I'll probably short it any time now. But if it goes above this line and starts hitting new highs, and it stays up there, and the second bar goes even higher, I would get out. But if it starts coming down here, below this box, this balance area, and it starts coming down and I get a second bar on the 4-hour chart and it continues down, then I would just load up on put options and I take it all the way down. And I can set my stop somewhere around here. Now I don't set physical stops. These are all mental stops because there's plenty of time. It's not like day trading futures. That you have to set physical stops because as the market moves against your position, you start losing a lot of money really fast. So you got to be very careful with trading futures, day trading. With options, there's a cushion there. So I'm not worried about that. But anyway, so that's how I would trade this, and that's how I would trade any market. All the charts are the same. They're exactly the same. They all move the same way. So okay, so that's how I would trade that, shorting it. All right, back to the ES. So again, this is not rocket science. You know, a lot of these people, they use momentum indicators, the RSI, the MACD, momentum, volume, 200-day moving average, 50-day moving average. And I used to use that, but you don't need that. All you have to do is just, the charts tell you everything right here. Everything's right here. Clearly, this thing's oversold. I don't need an indicator to tell me it's oversold. Now, of course, it can go even more oversold up in here, but then that's making it even more dangerous and even a bigger crash or a bigger correction. So I don't think that's going to happen. Like I said, if it does, I get out, so I protect myself with a loss, not a big loss. And if this starts coming down and it gets below this line or somewhere in this area, I'm going to buy some more put options. It's that simple. That's how simple this is. I shouldn't say that because, you know, there's a lot of emotions that are involved in this. And anyway, you stick with me and I'll help guide you through this. And then we'll make it simple. Let's make some money on this. Okay, so that's it. I'll talk to you guys tomorrow.